Good afternoon, everyone. Welcome back to the commodities update video, where we update you guys on natural gas, gold, and silver, as well as the US dollar, where we give you guys support and resistance levels to potentially play off of, as well as what's the most likely scenario price action we'll be heading into later this week. All right, let's get started. So we're looking at natural gas first, and we're getting pretty close to our pretty much bottom resistance. You can see this mirror looking line right here. Bounce, 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 and this is the resistance, rejection, 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 and rejection. So pretty much we are coming down to this level of support zone, and still no signs of bottom yet at this move. So yesterday, you guys know where I talked about when we closed at the low of this day, the psychology of it means that there could be more downside. So it's just that bears want to take it lower, and the market closed. We ran out of time. So that's what closing at low of this day or high of this day mean. Obviously, it doesn't always go lower the next day or go higher the next day if we close at the high of this day, but the probability of it happening increases when that happens. So what, as a trader, we always put multiple things together that increases our probability of the trade working. So when we have this happening again today, pretty much, we zoom into the 15-minute time frame, and we can see we are pretty much closing at low of this day as well. But we could say that we are seeing a little bit of sign of support. You can see in the morning here, we bounced here once, twice, 3 times, retested again here, bounced off again 4 times, bounced off it again here 5 times. So we can say we can temporarily hit a potential bottom support here. This support zone right here at 2.5 is also really close to this mirror looking line. Obviously, my mirror looking line of this bottom support may not be perfect, because let's say I just adjust this a wee bit, right? It could just be like that, right? Now let's say we hit the support, and anybody could draw their lines for the diagonally lines, and it could be slightly off. So diagonal lines are visual guides, but the horizontal ones are more definite, because you can't really mess up horizontal lines. If I draw here, then the algos will likely be drawing in the same area, because there's a lot of volume in those areas, and volume, access, support, and resistance. So when we look at diagonal ones, those are visual guides. So let's go back to the 15 minutes. So 2.5 coincides with this uptrending resistance line at the same time. So we can potentially say this 2.5 zone that it held 5 times today. So the price action is telling us today that this level held 5 times today. So that may potentially be a bottom, but that is just bulls playing defense, or that could just be shorts covering over down here, right? That means we need to see some offense going here. So if we don't see any offense going here, this just means nothing. This means it could be just shorts wanting to take their profits, and next thing you know, this goes lower. So this is just the very first initial little sign that this may be the temporary bottom for this pullback from the this big pullback here. We have pullback. Let's see here, 12.5%. So it does make sense for some shorts to cover and take some profit. The only good news here is that we are still above this pivot. So technically, this is still a higher low, meaning the low of this pivot is still higher than this low. So, but the thing is, we have already retraced over 50% of that bounce of this A to B bounce. That means that on this next bounce, it will favor the bears for a potential downtrend to confirm. But we'll have to see what the bounce looks like when it happens. As of now, we don't even have a sign of bouncing yet. So we don't want to get ahead of ourselves, because we don't even have any signs of bounce yet, other than that it held 2.5 level support. I want to see bulls play some offense after holding that 2.5 level, and we'll see if we can actually come back up. If we do come back up, and there's potential we could form an equilibrium. Equilibrium just means the next move is going to be within prior move. So you see how this move is from here to here. This drop is within the prior move. So the bounce is going to be within its prior move. Then it will just tighten up into a equilibrium. And then when equilibrium breaks, we'll know which way it wants to break with volume. So let's say it tightens up to next week and then decides to break bullish. Then we'll get something like this. It'll form, that'll be a daily uptrend confirm. If it decides to be there, then we're going to be breaking out of this level as well. So we'll see how it forms. So as of now, the very first step for me, I want to see some offense going off of this 2.5 level. And you can see yesterday, there was no levels of support really. It kind of just was down and closed at low for today. And today we got down here right in the morning, bounced, and we retested. So there is some level of short covering or potential support down here compared to yesterday. And so the chances of it as bouncing tomorrow is higher than yesterday, but I wouldn't bet my house on it because this is just a level holding moment without any offense going. So what I want to see on the hourly chart is we made a higher low. So this is the bottom. We bounced. Now we pulled back. So you can see the pullback's low of the pivot is higher than the prior pivot. So now the bulls, I want to see break above the prior pivot high for us to form a hourly uptrend. So we can do that. And I have more confidence to say this 2.5 zone was the potential bottom. Obviously, nobody can guess the bottom or nail the bottom when you're trading. So what you can do is, let's say you think 2.5 may be the bottom because it held 4 times today. Get in, and you set a stop loss just below it, give it some wiggle room, right? And if you're wrong, no big deal. You lose a little bit, and you try again. And that's for people that are for aggressive bulls. This kind of play is for aggressive bulls that want to try to nail bottoms. If you're a more conservative bull, then you can say, okay, I'm just going to wait for an hourly trend change to get in. So when that happens, right, you get in here. Once you get the hourly uptrend going, and then you set your stop loss below the prior pivot. So if you're wrong after the hourly uptrend confirms, comes back down, you also lose just a little bit as well. Or you can be even more conservative. So you get the hourly uptrend confirmed, back test. Usually we don't always get back tests, so it just depends how conservative you are. The back test of the prior high, and if it acts as support and it starts bouncing, you get in here, you set your stop loss below that prior high, and you see if you're right or wrong. If you're wrong, you also get stopped out a little bit, right? It depends how conservative or aggressive you guys are. For aggressive bulls, this would be the area that you guys are getting in right now, and to see if this can potentially be that 2.5 zone of low. None of us would have gone in here, even if you're aggressive bull, because there's zero signs of any kind of support forming really along the way or bounces. And right here, we have slightly, that back test a little bit twice at 2.5, so we can potentially try for the bottom. But yeah, so we'll see if that actually ends up being the temporary bottom. So we still get some hope. The last thing I want to see is breaking this pivot, and that would just mean, yeah, that'll be a bad sign. So, all right, and let's take a look at UNG. So UNG, so this is what we don't want to see on natural gas, meaning breaks the prior pivot. Breaks the prior pivot, then it just continue of the trend. See, pretty sure it's continuing of a weekly downtrend. Let's take a look here. It's a bit choppy. Initial move. Yep, pivot set right there. Because you can see right here, the top of the move, the bottom of the move, and we bounced. So this candle was above the prior candle, so that the pivot is set. And now we're broken below it. So that's a weekly downtrend. Weekly charts. So yeah, it's not a good sign. And let me take a look here. Does look like there is a wedge. Let me take a look. Oh, we actually broke out of that. I was looking at this pattern where it's like all resistance. You can see we rejected here 5 times. Bounce off of it 1, 2, 3, 4. And now we're outside of that this week. It's valid, but the resistance will still be valid. This resistance is definitely going to be tested again if we do come back all the way up here. We'll take a look at that when we are closer to that resistance. That would be, yeah, another 30% up. So we don't have to worry about that right now. What we want to see is where would this bounce? So do see something here. Support zones. You can see every time we go lower, it looks like okay, it's probably a megaphone then. Yep, looks pretty much like a megaphone to me. So megaphone just means higher highs, no follow through, lower lows, and no follow through in both directions. So that means that we break to a new high, meaning higher than prior high, and lacking bull follow through. Same thing for bears. We break below the prior lows, below this low, and then no bears follow through. Do that again over here. Below let's see, this low is lower than this low, and just no more follow through. High, higher than this high. So this is the most frustrating pattern because it stops out both bears and the bulls. Unless you're like a ninja, you take a profit on each way. For people that are just holding, you're like, you know, breaks the prior high, you get in. Next thing you know, comes back all the way. For bears, breaks the prior lows, you get in, you short again, and next thing you know, V shape, right? So it's very frustrating. Same thing over here. Prior low, bounce again. Now we are pretty much right on the spot, so we may actually bounce here. We'll see if net gas bounce here and UNG actually bounce at the bottom of this megaphone. Yeah. For aggressive bulls, very similar. You can get in, the stop loss below this downtrending line support. Take a look at the hourly. Yeah, because on the hourly, you can see very similar to net gas. This level was holding, and we made a higher low, meaning the low of the pivots. You can see the low of the candle of this pivot is higher than this low. So now I want to see us break above this higher high pivot for us to potentially form an hourly uptrend. It does look like our EME 12, a teal looking line, is on the hourly chart is currently a resistance. So we can break that at the same time and break this 6.52 level. We're going to have an hourly uptrend confirm. And we can more confidently say that could be the potential temporary bottom for this drop when that occurs. And it'll be the similar tactics, what I showed you guys on net gas, how to get in if you're more conservative bull or more aggressive bulls. It'll be the exact same way to get in here as well. So, you guys, how aggressive you guys want to be. All right, let me see if anything on the 4-hour real quick. No signs of that. Anything on the 4-hour for bounce. So we zoom into the hourly. Say this is the very first step we want to see. Yeah, 15 minutes, same thing as net gas. We're seeing that in the morning where they try to help this level. So that's good. All right, let's take a look at gold. Okay, so dollar had another strong day today, broke out, and gold pulled back to the level of support, pretty much at this cluster. Now, same thing, closing a low of this day, 0 signs of bounce at the moment, and no signs of slowdown on the dollar as well. So we may actually get more pullback. Who knows? Maybe we'll even come back down out here to test this this maroon channel. But as of now, we don't want to say that yet. We don't want to predict because it's quite a bit away for gold. It needs to break this level of resistance first. This cluster of zone where we're currently sitting exactly there, as well as this 1980 at the same time. If we break that, then we're going to break that pivot. then it's a daily uptrend back to a neutral trend. If it does form back to neutral trend, then we're going to give more momentum to the bears because they'll have a lot more room now come from a daily downtrend after that. If they make, if they get another leg down, definitely start favoring bears. You look at the dollar to see where it might start pulling back. Okay. So pretty much exactly 105. And we were talking about this yesterday where we'll probably come to 105 and slightly pull back. Then we'll see where it goes. So if we get a daily consolidation going on, say tomorrow, right? We'll see how the level of retracement is. If it's a very shallow retracement and we just start bouncing again, then there may be more upside. This 104.4 level. See how much resistance is there prior. Now it's going to act as strong support. So if dollar just comes down to 104.4 and it then starts bouncing again, then metal is going to get even weaker. So we'll see probably more downside on gold and silver as well. And this may retest 105 again. So we'll see that kind of pullback on the dollar. As of now, no signs of red flags on the dollar at all, even on the short-term time frames. It's just a very slight pullback. So we'll see if we get more downside or not. All right, let's take a look at silver. So silver looks like it's giving it pretty much all back. Went from relative strength to hitting a resistance, tried for 4 times, and then now it's relative weakness. Does make sense. You can see this resistance was very strong. Tried 4 times, 1, 2, 3, and then 4. And then it tried 4 times here in this little cluster of time. So as well as it coincide with the 24.6, you can see there's a very strong support, bounce, 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 and rejection. So when we come up to it as prior support, it's going to act as a resistance. And essentially that's what happened. So the more confluence of signals in one area, for example, if you get like an RSI divergence here, MACD divergence, and then you have 2 strong resistance at the same time, you add them all together, that just increases your probability of your trade by a lot more. Obviously, it's not going to 100% work out all the time, but the more confluence of signals in one area is the kind of setup that you want to take. So as a trader, you don't want to be trading every day. You want to take really good setups and have it run at least a little bit. Because let's say you had 4 confluence of signal here, and then you short it, and then we had a 1 small red day. Right? And then you take the profit the next day. You made 1.4%, right? Then, versus if you hold it and let the stock run, you're making 6%. Obviously, it's not going to work out always like this, but when it doesn't work out, let's say you take half of your profit here, and then you let the rest run. That's how you usually do it. So if it doesn't work out and it comes back, stop out, break even for your half of your position, but the other half you already took profit on. So you stop out for green, right? And the times that do work out, you get a nice home run, 6%, right? And then versus you trying to trade every day, trying to make a small move, 1% here, 1% there, and you get stopped out and you lose another percent there, here and there. Just, you're tired. And it's about your mental capital versus you take very good setups for trades and get some home runs or stop out slightly green. Yeah, that's the kind of a way you guys can trade. Just giving you guys some tips there.